Hi, and thank you for joining us today. My name's John Barker, and sitting with me is Mark Allen, Trey McGinn, Daniel Burton, and later, Alex Goterick will be joining us from an on-site location. We are the Barker Multifamily Group of Marcus and Millichap. We're here to discuss the market conditions with regards to multifamily assets in the Dallas-Fort Worth area. 2014 was a great year for not only owners, but also investors. Our group closed 16 deals. The average time a deal was on the market was less than 30 days, and we were able to achieve a sales price of 99.89% of the seller's asking price. Purchasers were able to attain attractive loans with rates as low as 3.9%, which offered a new investor cash flow day one of their ownership. Dallas-Fort Worth and Texas as a whole continues to be one of the strongest markets in the country. In 2014, 113,000 new jobs were created in Dallas-Fort Worth, expected to grow by an additional 3%. In 2015, that would mean that Dallas-Fort Worth would generate upwards of 114,000 new jobs in the upcoming year.
Those are impressive numbers, John. And in addition to that, 18,000 new units came online in Dallas-Fort Worth. Now that doesn't take into consideration the units that were torn down. No one ever talks about that. But when you take into consideration 100,000 new jobs in Dallas-Fort Worth, that's creating high occupancy that we haven't seen like in 14 years, John.
That's great information, Mark. So the big question becomes is how does this affect overall values and properties in our market? How can an individual who is looking to either sell or invest in this market can benefit from the demand in Texas?
To touch on that question, this is one of the most unique times this market has ever seen. It is strong for both owners and investors alike. With the low vacancies and increased rents, owners can expect to achieve top of the market value for their property. On the flip side, it's great for purchasers as well because they can focus on getting low interest rates, great loan terms, and expect to receive continued market improvements as we move on.
Now, Trey, you specialize in the Fort Worth market. What are you seeing in Fort Worth that investors need to know?
Well, it's an exciting time to be looking at Fort Worth as an investor. Since 2000, Fort Worth has been one of the fastest growing cities in the United States. This has led to high occupancies and increased rents, which is great for owners. But it's also great for an investor because it's expected to continue. Forbes has just ranked Fort Worth the #2 city in America for job seekers, which will continue to bring people to Fort Worth.
Okay, Trey, so what are you seeing with regards to velocity, the demand for multifamily in Fort Worth?
Well, of the properties 50 units and higher in Fort Worth, 45 of them traded last year, and they were achieving a cap rate of 7.7%. Again, we also have a low vacancy at 5%.
So Trey, what I'm hearing is that it's all of Dallas-Fort Worth is benefiting from the growth in Texas. Everybody talks about Dallas and what's going on in Dallas and growth. So it seems to me that really that Fort Worth is making their mark on the map.
Absolutely.
That's interesting. So to touch on Dallas a little bit, Daniel, to take a look at Dallas, what are you saying?
I think to touch on a note you said earlier, 114,000 jobs being expected this year, and a huge part of that can be attributed to companies like Toyota, State Farm, and other Fortune 500 companies coming and bringing their headquarters here to Texas, here to Dallas to be more exact.
Interesting. Now you also focus on a very particular niche market of Dallas, the East Dallas market. Now what exactly is that?
So Dallas, the North Dallas Tollway going east all the way to 635.
Now, East Dallas is a high-density, high-demand area. What are you seeing? Give us some details on what are you seeing is happening in that corridor.
One of the biggest things I'm seeing is we have these developers coming in, buying up these 50s, 60s products and scraping it and then building these Class A assets.
Interesting. So what are you seeing with regards to velocity? How many deals are trading? How are cap rates being affected?
Well, it's an extremely active market. We have approximately 85, give or take, deals were traded in that pocket in 2014.
So 85 transactions. That's a lot of transactions for one part of Dallas. How many properties are actually in the East Dallas corridor?
Roughly 600 to 700.
And that's properties that are 10 units and greater.
10 units and greater, yes,
I
sir.
got you. Okay, so then what are you seeing with land value in East Dallas?
You know, with that redevelopment that's happening, that's increasing the land value. So now, give or take, in that whole pocket, when it averages out, it's about 50 a foot.
Wow, that's impressive. So from what I'm hearing from you is that this East Dallas corridor is highly demanded, a lot of action going on. How does Mr. or Mrs. Mom and Pop first-time investor get into this market and make money?
You know, great question. I get that question asked to me quite often. You know, there's plenty of assets that these investors can come in, buy up, renovate a little bit, and push the rents. And with that comes greater yield.
You know, Daniel, we can't talk about East Dallas without talking about its next door neighbor, South Dallas. Now, John, that includes Oak Cliff, Duncanville, DeSoto, Cedar Hill, Lancaster, and Cockrell Hill. But I know you know this.
Yeah, it's funny, Mark, you know, South Dallas is an area that I've worked for nearly 15 years. And so very familiar with it, and I've seen South Dallas go from what's portrayed as the worst part of town to actually becoming one of the more affluent areas, a lot of growth, a lot of job demand. What are you seeing as far as what's happening to the multifamily sector in South Dallas?
Well, about 40 transactions took place last year, John. One of those was an Class A asset. 11 of those were B assets. 25 of them were C assets.
Did you say 40 assets transacted in South Dallas?
That's correct, roughly 40.
Why are investors now looking at this market that 10 years ago nobody would look at?
Well, you know, John, one of the reasons is that South Dallas is now home to one of the largest distribution centers in the state of Texas. We've got millions of dollars there right now. Home Depot has a distribution center there. L'Oreal, Whirlpool, Ulta Incorporated is building an $18 million distribution center right there off of 20 in the heart of South Dallas.
How is all this growth, which is just phenomenal, affecting values? What kind of cap rate can a buyer get into a deal in South Dallas? I mean, what's really the driving factor for an investor to go in South Dallas?
Investors go to South Dallas for one thing, John, and that's high yield. In general, you're going to have older stock there. You're going to have some issues. It's ideal for hands-on investors that can come in, you know, add a little stronger management to each property that I've seen, transactions that I've worked on there. And, you know, they're able to make a large return. Some of them hold them for, you know, decades. Others, they come in, they put the work in, they're in and out within 5 years.
Interesting. Now, we've talked about Dallas and Fort Worth, but let's not forget about all the great towns in between. There's Irving, the mid-cities, and of course Arlington. Coming to us from Arlington is Alex Goterick. He has been so busy closing deals in Arlington, we had to get him on site at his latest closing. Alex, how are things going in Arlington?
Well, John, let me tell you, Arlington is unrivaled. The demand here is incredible. Just in the past 2 months, we've closed on 4 transactions. The demand here is incredible. In fact, I'm on site at one of our latest closings. You know it well, the Rogers Landing Apartments, 108 units. We've got 80s product here, pitch roofs, individually metered, just a beautiful product. And yes, 1 block from Cowboy Stadium, AT&T Stadium right here. And as you well know, Rogers Landing closed for 100% of its list price. That's right, 100. Multiple offers came in 10 days. This was under contract.
Why do you believe there's so much demand in the Arlington market right now?
Well, I got to tell you, John, it'd be easier to answer why Arlington isn't such a great community with bustling. We've got many factors that are making this just an attractive area. AT&T Stadium, home of the Dallas Cowboys. You got Texas Rangers, Globe Life Park. We got, Hurricane Harbor, all the elements, Six Flags that just make this city outstanding. Some of the growth, in the community that's going on, UTA, we've got a big project going on there. Students are going to, have a new look. It's going to become kind of like uptown Dallas in that area. I think I hear bulldozers in the background. Then also, we've got the Viridian, which is a great community project going on, to really bring vibrance to the Arlington community. We've got GM, major employer over here. 360, 30, some of the major highways. What else can you ask for? I can see why these investors are so attracted to this area with its high results.
That's true. As a whole, Arlington's been a great spot for people to live. It's in the middle of Dallas and Fort Worth. You can drive to Dallas, you can go to Fort Worth, a lot of families.
It's a perfect place for 1031s. Ascension Point is a prime example of what our firm can do for investors. 119 out of 178 Class B property traded higher than what that seller wanted a few years ago.
Interesting. Now, earlier we'd mentioned that we closed 16 deals at 99.98%, excuse me, 99.89% of our seller's asking price. What was the result on the Ascension Point?
Ascension Point, actually, the seller attempted to trade that in 2013, wasn't successful. He was able to get a higher price in 2014
With Marcus and Millichap.
with Marcus and Millichap. The demand there, as you can see, 1031, we collaborated on this transaction with our partners in California.
That's fantastic. It's a great deal story. And it's actually very similar to the Garden Park, which had been a 253 unit deal that we had sold, that had previously been marketed with another group, another firm, could not get it done. Not only did we were able to achieve the seller's asking price, we actually achieved it by 19%. So we got 119% of what the seller was asking for on that particular asset, which says a lot about what's going on in Arlington.
Yeah.
The demand in Arlington is incredible. Investors want to be in Arlington, and that's why when you see a deal come to the market, it flies off the shelf. As an investor, if you see a deal in Arlington that you like, you need to grab it as quickly as possible.
Irving has so many faces, John. It's the home to Microsoft, Citigroup, the Zelle Corporation. Roughly 38 transactions took place in Irving. We did 3 of those transactions.
Interesting. So what are you seeing to being the driver in Irving?
I would say, the Dallas-Fort Worth International Airport, it's a very diverse city, very dense city. You've got all the corporations, you've got tons of warehouses, easy access to both downtown Dallas and Fort Worth. It's a great place. Of those transactions, 27 of those were Class C transactions, 3 of them were Class A, and 9 Class B transactions.
Why are people gravitating towards the Class C deals?
The Class C deals had the highest growth in occupancy in Dallas-Fort Worth. In Irving, Class C properties, a flat roof Class C properties, all bills paid. What I'm looking at, it's showing that they're trading for around $35,000 a unit. If they're separately metered, they're trading for between 40 to maybe 45, maybe a little bit closer to 50 in some cases, John.
All right, well, those are phenomenal prices, Mark. So tell me a little bit about a couple of the deals you've closed, that we've closed in Irving. I know that Finley Terrace currently is under contract.
What's interesting about Terrace on Finley, John, we had guys flying in from California. We had local investors able to drive a multitude of offers within 2 weeks.
How many offers did you have in those 2 weeks you marketed the deal?
Roughly 10, John.
10 offers.
10
and
offers.
at what percentage of the asking price did you put that deal in a contract?
100%.
100%.
That's correct.
Is that a sign of the times?
I would say so, and I would also attribute that to some of that to the city of Irving.
Do you think that that's going to change anything in the near future? You think that demand is going to continue to grow?
I think it's going to continue to grow. I think the population is going to continue to swell there as well.
So Daniel, tell me about the mid-cities, what you're seeing going on out there. What's kind of the overall feel?
It's becoming quite the coveted area due to certain commitments the city has made, the cities in that area have made, being where they are, being where they're located in the Metroplex. Great education, great location. So that's definitely upped the competitive.
Would you say that that's going to affect the values of the assets there? Do you think that's going to be able to allow owners to increase rents because the cities have committed to improving?
Oh, absolutely, 100%.
That's fantastic.
I definitely would say that too, John. I mean, if you look at what we did in the city of Euless earlier this year, John, with the Terrace, the Concord, and Shadow Creek, the city has made a true commitment. They're going to take those units, demolish all of them, and come in with a brand new mixed-use development. It's going to do a lot.
That's interesting. We're talking about demolishing, because earlier you mentioned the net new apartments. Nobody ever talks about what's being torn down. So if they're going to tear down roughly 700 units right there on 157, how does that affect the other assets in Euless?
Well, you listed Oakwood Crest earlier this year. I think that's going to increase the occupancy and drive the rents up on the existing stock there.
As you can see, Dallas-Fort Worth is thriving. Current owners have seen their property values go through the roof. Investors are able to come in and capitalize on low interest rates, long-term non-recourse debt, and have a very attractive yield day one. We invite you to reach out to the Barker Multifamily Group of Marcus and Millichap. If you have interest in selling, purchasing, refinancing, or simply looking for market information or just evaluation of your asset, we're hoping to establish a long-term relationship with our clients and help them make the best decisions moving forward. And we want to thank you for your time today. Myself, John Barker, Mark Allen, Trey McGinn, Daniel Burton, and of course on site, Mr. Alistair Tarek. Thank you again.